Tell us a little bit about, I guess, the story, the foundational story, because Lux has been around for a number of years.
Yeah, we've been around for over a dozen years. The firm's now managing $1.5 billion across a series of funds, and most recent one is $400 million. And we do everything from super early seed stage to later stage corporate spin-offs and divestitures that people might want to capitalize. And about a third of what we do would fall under energy and materials. About a third would fall under healthcare, which is everything from sort of healthcare IT to things like robotic surgery and med devices and biotech and more sophisticated things. And then the final third tends to be in what we call core technology, which is more defined by what we don't do. So we do very little, if anything, in internet, social media, mobile, ad tech, video games, things that we think, there's far better firms that you would go to. And so we sort of want to avoid the adverse selection of focusing on that. And so we like sort of more eclectic, out there kind of stuff. Another third of what we do in terms of style is what we would call thesis driven, and that happens to be there's 10 investors at the firm, and myself and Peter Aber, the co-founders. Very different styles. Pete is very people driven, and he likes to find the entrepreneur and sort of back them mostly on their personal narrative and their ambitions, their ability to recruit and raise money. I like more thesis driven stuff, so I read voraciously and try to understand what's the consensus in a market, what's the variant perception, what's the thing that other people might not be thinking about, and sometimes for the wrong reason. And then we'll do these special situations. But it's a very wide range of eclectic things.
And as an investor myself, I always wonder, how do you guys do it, right? Because so you go from biotech to drones to AI to material science.
Yeah,
so you read voraciously, but how do you one, get to the level of knowledge where you have a prepared mind so you can recognize an opportunity, and then how do you diligence it?
Okay, so on the knowledge thing, I think it's actually more inverting. It's trying to okay, what's the minimum level of ignorance we need to avoid? And that basically means knowing as much as we can about the space, both public companies, private companies, what the dominant industry structure is, who the major players are, where market share exists. And then you can know all of that. And if you look at public market analysts, they might all know all of that. But what they don't know is the entrepreneur who has some conceit that says, this is the way that the world ought to look, that we would all consider arrogance of the highest order. And then we have to basically detect whether or not they're full of shit or not. And if they're not, decide that we want to be in business with them. And so typically the most important thing that we're vetting, and this is probably the number one thing that I changed my mind about. When we first started, I was really focused on having a competitive technological inside edge, to know something more about material science or chemistry or physics or some of the things that we were funding. And now it's 99% the two-legged mammals that we're backing. It's the people, and trying to understand, are these people that can raise money? Can they recruit? Can they tell a story? And oftentimes we're investing on that premise, but that doesn't necessarily reveal whether or not they can actually operate a business. And somebody that's got the technical expertise to develop a product, somebody that's got the product supply chain management to be able to do DVT and EVT and ship. And so post facto, it's very easy to look at all these things and tell this perfect linear chain of events, but the truth is, a priori, you really have no idea.
Yeah. And that's super hard, right? To find technical people with all the depth of technical knowledge that they need to be successful, but also commercial instinct. And so, I mean, if you have to make a trade-off, because presumably you have to make a trade-off, what do you optimize for?
Well,
do you build around somebody with great technical excellence, or how do you think about it?
There has to be some amazing entrepreneur that's paired to it, and so if you have, we've had companies where you have incredible operators. I mean, they could execute, they could get things done, they can't raise money, and then there's other people who are amazing storytellers, but they can't actually build a product. And so it is, I think, a rare mix. Usually, the best founding teams we have are that iconic Jobs Woz-like mix. We have a company called Zoox that's a little bit secretive, but less so these days, that has raised a substantial amount of money and big Herculean effort around autonomous vehicles and networks of these things. And the founding duo is a brilliant technical guy and who ran all the self-driving stuff at Stanford, but he's paired with somebody who comes actually from like a storytelling, movie-making, animation background, right? So total liberal arts, hard sciences, soft sciences, and I think one without the other, and they have a supreme appreciation for each other. It wouldn't otherwise work. And you see the same thing, really smart, brilliant, PhD level, scientists, technologists that decide they want to do something entrepreneurial. They can't stand the bullshit of the average sales guy, but they need the average sales guy, the bullshitter, And the salespeople can't stand the technical people who you won't put them in front of a customer, but they need each other. And it's sort of like that third culture, the marriage of those two that I think is critical.
That's very interesting, right? Because you hear a lot of VCs saying, especially for those areas, I only want to back technical founders, but actually you like sort of cross-disciplinary teams where people balance each other out.
And at least in our case, we've been stuck with some technical founders that are brilliant that just can't raise money. You put them in front of people, they can't. And if you can't sell as a technical founder and you don't have a partner that can sell, think about all the things you cannot do. You cannot sell the media to cover you. You cannot sell investors to want to fund you. You can't convince that key hire to take whatever opportunity cost that they have right now of staying where they are or moving across the country to join you to do that, let alone their spouse and their family. And so the ability to sell the vision of what you're going to do, I think, is the most undervalued and important thing.
And then, so you find these people, they come to you, you're compelled, then how do you diligence it, right? Because one of the big differences between deep tech and, say, SaaS is that by the time they come to you, I mean, I guess you do cross stage, but let's say, early stage, by the time they come to you, they don't have much to show other than the background of the founders, right?
Yeah, in some cases they might have a prototype, they might have patents on a design, they might have something reduced to practice, but most of the time it's requiring us to believe, ideally before other people might even understand what it is technologically. I'll give you an example. There was a cutting edge area of physics which actually was real and true. And this is, by the way, I think you saw news today about Theranos, right? And this was something, hard tech, right? But it proved to be, or possibly proves to be fraud. The number one question that I think most investors get in trouble that they don't ask, does it work? Now, very early on, you might not have something to test. And so we always ask the question, how much capital and how much time to accomplish what and who will care? To flip over that card, if you're thinking about it like poker terms, to get that next card. And when we're funding somebody, it's what's that plan in a year or two that's going to show that you've created something technologically that other people are looking at and saying unfairly, that's not fair that they made that. Whether it's some advantage in cost or performance or capability or partnership that they end up getting because of that, that's ultimately what we have to believe in to fund.
And to get there, do you pull in outside experts from University X or Y?
The team itself at Lux is quite technical. So Sheen Farshi's PhD in electrical engineering, and Bilal's got a master's in material science and a PhD in material science, and Zach's got a master's in material science, and Adam Goldburn's got a PhD in stem cell biology. The two stupidest people on the team are the two founders, me and Peter. Neither have PhDs, but technical in different orientations. But just because you know something about one area, that knowledge can be obsolesced or irrelevant for the next one. So yes, we're constantly pulling in people, and I have to say the best technical diligence we get is from the existing portfolio. And now we have to weigh that carefully, because sometimes you go to an existing portfolio company and there's some bias you don't know about. Maybe they try to hire that person, they said no, or and so you have to, if you can get through that and get them to get to technical ground truth, you get some really great insights. And with 100 plus companies and 100 people at each of these companies, you get a lot of people that you can tap into to sort of tap the Lux family to get some technical diligence.
So deep tech investing is not for the faint of heart, right? Because you got all sorts of risks. The product may not work, may not be able to commercialize. But financing risk is also something at least to think about. So there are people like you, but once you've invested, the people that come after you, do you worry about that? I mean, there is a lot of money in the ecosystem, but there's not that many people that actually truly invest in deep tech.
Yeah, today is interesting because I think there is a lot of capital, right? You have the very big giants like SoftBank that are really changing just the entire equilibrium of the fitness landscape. It was like dropping a giant boulder in the wave pool, and I think a lot of other people are following suit, and you're seeing formation of pools of capital that didn't exist before, coming into all kinds of, you look at things like satellites and autonomous vehicles, and you look at the money that's pouring into EVs and almost every segmentation of that, there's a lot of money.
So corporates and...
Corporates too, which to me is a worrying sign in a sense, because usually corporates are most active investors at the peak of a cycle, right? The venture capital funds within corporates start to get spun up. Usually it's a counter-cyclical indication. Thinking about financing risk is just sort of one of those very key risks. Peter, my co-founder, is the perennial optimist. If you catch him, he's in Nantucket Reds and sort of pastel colors, and he's perma-smile. My wife jokes I have resting bitch face, and I'm like the angel of death and always wearing dark and monochromatic stuff. he is always thinking about how can we make sure that we lined up, the right people in the syndicate to reduce the financing risk. How do we think about what the Series B, C, and D are going to look like, from the beginning? What are the PR and who are the key hires and who can we populate the board with and what are the channels that we can open up to them? And I have a saying that failure comes from a failure to imagine failure. And so I like to think about everything that can go wrong. And if you can identify the things that can go wrong and throw time or talent and money and kill those things, then risks get reduced. So that could be technology risk, it could be product risk, could be market risk, financing risk. Every subsequent risk that you kill, a later investor, whoever they are, should pay a much higher price than we have paid because they're taking lower risk and should demand a lower quantum of return for that risk. And so that's generally how we think about it. I almost think about it like the first law of thermodynamics, like energy is not created or destroyed, risk and value just change form in the same way. And so I like to identify what are all the risks on the table, how do we knock them off? And financing risk historically has been one in this space, but today I feel like the scare abundance of cash. It's almost too much money.
Interesting. I guess the other aspect of deep tech is that it takes almost by definition a very long time for the dream to become a reality and then a commercial success. So you operate on a much longer timeline, right? There's no, except for the Oculus or Cruise, once in a billion type occurrence. I guess how do you think about that?
And by the way, moment of candor on that. Shaheen is areas that we look at are generally driven by passion, right? And so somebody on the team is passionate, they're psychotic about something. It's all they talk about to the point where the other partners are like, all right, shut up already about that thing, right? Shaheen is psychotic about automotive, like since he was a kid. And so he actually was friends with Kyle Vaught from Cruise. And we gave them terms, 15 or 20 million, I forget, at a 40 or 50 pre. It was like a 65 post. And Sam Altman from YC was an early investor, and he wanted a higher valuation. Spark ended up doing it at an 80. And during the course of diligence, they put in 20 million round. It was a 100 million post. During the course of diligence, we introduced them to GM. And 9 months later, having not invested and been disciplined on price, we missed an opportunity to make 11 times our money. And
well, I'm sure they're very grateful, though.
Yeah, no, exactly. And anyway, but the time horizon, that's an anomaly, right? And whether that was right time, right place, luck, whatever it was, those are rare instances. Most of these things take. The reason we have 10-year locked money in our funds is because it takes a long time, and you don't know. So I actually believe that the number one edge that as an investor you can have, and even as an entrepreneur you can have, is a differing time horizon, right? If public markets are discounting back on average 12 to 18 months, maybe 2 years, somebody that has a 3, 5, 7, 10-year time horizon has time arbitrage. The ability to go further out on the spectrum, by definition, means you are competing with fewer people. Everybody is focused on the here and now, right? Investors in the public market focused on the quarter. Investors in the private market, for the most part, venture guys, want to find the thing where they get quick users, quick hits, quick adoption, lots of app downloads, that you can measure those takeoff metrics in 3 months, 6 months, 9 months, in a year, which means you have a lot of competition because everybody's thinking that same way. So if you can think further out, which also means that you're investing in stuff that is less likely to work, more improbable, I think you have a competitive advantage. Now, everybody knows that they can do that. Why don't people do that? I think it's just dispositionally very hard. People like immediate gratification. You like to know. We put up a basketball shot, and we wait 5 years to know if we even hit the rim. And so I think having that psychological disposition and then having the institutional constraint, which as venture guys, we're able to have 10-year locked money, is the only thing that lets you do that. But we're totally comfortable, and the investors that we've attracted are totally comfortable with very long time frames, so long as the magnitude of what we make if we're right exceeds what we lose when we're wrong.
So in that general context, how do you think about hype cycles, right? Like we I guess talked about this with Say a little bit, but so IoT was super hot, it's no longer hot. VR was super hot, it's no longer hot. I guess does it matter from your perspective across a long period of time?
It matters in a few ways, and it's funny because our partner Bilal was just either tweeting or maybe sending an internal note, and maybe I'm revealing inside laundry, but he was like, a year ago I met all these investors that were just starting funds, and they were like, I'm absolutely committed to hard tech and hardware, and I really want to do deep tech and frontier tech, whatever the buzzword is, right? And he sees them again today, and what it was South by, and he says, everybody's doing crypto, and they're like, we're crypto funds, and And so you have this traveler tourist element, right? And I think those people over time self-select themselves out. Now, some might get lucky and actually become like the definitive crypto, fund, or maybe there were people last year who become the definitive hardware fund, but I think it's rare. There are hype cycles, and hype itself is just a measure of belief and expectations, right? And some of that becomes this positive feedback effect driven by media. Sometimes it's a narrative that people rally around of success. Sometimes it's the big news or move of a prominent investor or a big company. And whatever that is, all that happens is you raise expectations, you lower the cost of capital, you get a flood of talent coming in, and all of that is a good thing, right? And then there's invariably a shakeout because 90+% of the companies will fail. The detritus, the stuff that fails becomes the combinatorial fodder for the next wave, and that's a great thing. But like, woe to the venture firm in 97, 8, or 9 that was like, who the hell needs another search firm to miss Google? So my mantra internally is funnel wide, filter high. We want to see everything, but just have very high, bar of scrutiny. I remember, and I'll give Bilal credit here as well. Zach Schildhorn and I, another partner at Lux, went to a conference in Vegas. It was NAB, National Association of Broadcasters. We went there because not a lot of venture guys were going there. Why did we go there? Because there was a cool hardware company, and we didn't win the deal. They never took $1 of money. They're amazing guys. It's a company called Free Fly Systems. They make camera rigs for drones. They make them for handheld stuff to get rid of like the Steadicam stuff. They make them for and we saw these guys, and I said, okay, with the proliferation of HBO and Netflix and AMC and everybody producing a shit ton of content, the arms dealer are all the directors of photography and production and cinematographers, and let's equip them, right? And so we went and found these guys in Seattle, and they never raised $1. At the time we were looking at them, GoPro had made them an offer for, a reasonable amount, 100 million or so, and they didn't want to take venture money. But we went to visit them, we tried courting them, we were not successful, and then at the show, I saw no less than 50 drone companies, and we had a bunch of investments in drones. We have a company, Drone Racing League. We have a company called Sci-Fi making drones for military and consumer. We've got a company called Hanger that's doing surveillance. I mean, we have like half a dozen plus companies that are leaders in their segments in drones. And I remember we're at Monday afternoon partners meeting, and I'm like, no more drones. We're done with drones. There's 50 drone companies. And Bilal had a more nuanced view, and I was sort of emotionally reacting to the abundance and saturation that I felt in the market. So, you just never know.
So a little bit to this point, what's interesting to you guys right now in those various areas?
Well, within those areas?
Yeah, the various areas of deep tech. You may or may not longer be looking at drones. Are you looking at other? We
continue to look in those areas because I think we have some expertise, and it lends itself for us to find the white space. I would say there's two phenomena broadly that we're interested in. One comes from this phenomenon that I call 100-0-100. And it's this weird thing, which is this mix of arrogance and ambition and intellectual humility. And the 100 part is the arrogant part. And so this is when I say that Lux, with certainty, 100% over the next 2 years, will be investing in the most cutting-edge, crazy shit that you can imagine. The 0 part is my confidence level of what those things are. I have no idea. But the last 100 is the certitude that I have that I know where we will find them with 100% certainty. And that's at the edge of our already cutting-edge companies. So 2 quick examples to sort of embody this. I got interested in a crazy area of hard tech, deep tech, frontier tech called metamaterials. Metamaterials are materials in physics with a negative index of refraction. The practical application of this is using them for satellites that can be as flat as the surface of this table with no moving parts to scan in space. And so you would get rid of the big mechanical gimbals that today track satellites. And I go to find all the scientists. Nathan Mervold from Intellectual Ventures had done the same thing. He locks up all the patents. And I go to see Nathan and say, I want to start a company. He says, great. Bad news. Unfortunately, Bill Gates wants to fund the entire thing himself, and there's no room for you. I have an emotional tantrum. I work my way into the deal. And it ends up being Bill Gates, myself, Nathan Mervold, the founding CEO, is the board. And it's the only board Bill's been on besides Berkshire, Microsoft. Totally surreal experience. We've done 4 other companies with Bill from that. But the amazing thing was not just that. It was that in Bill's office, in a boardroom, I find out that these young guys want to take these little antennas for satellite communication and high-speed bandwidth and put them on these small satellites. That leads us to Planet. And we fund those guys. And then while we're in, and now Planet's got the largest constellation of Earth imaging satellites. Each one's the size of a bread box. They totally changed the economics. They call it, agile aerospace. Never would have had that insight if it wasn't for the first one. Then from there, we find out about this company, Orbital Insight, and this guy, Jimmy Crawford, who built the artificial intelligence for the Mars rover, ran Google Books, built this business called Climate Corp that sold to Monsanto for $1 billion. And he's running analytics and AI and machine learning on the imagery, whether it's coming off of satellites or drones or planes. So we dubbed this pixel suck, because all these platforms are sucking pixels off the ground, but the value is in processing the information and then selling it to hedge funds and governments and supplemental spy stuff. And so that chain of events, a priori, totally unknowable, right? That's 0. But the 100, which was following the certitude of, at the edge of each incremental company, it led us like a breadcrumb trail to the next. Zoox, same thing. I'm in a room there. We had put, I think, $25 million into the company, and the room is, I don't know, half the size of this little area over here, and all these people are playing video games. And I'm like, what are these guys doing? Like, we got a lot of money in this company. And they said, no, outside the vehicles, which don't even look like cars, they have LiDAR and optics and vibrational sensors and thermal sensors, and they're ingesting all that stuff at the rate of 1 second per second, what we call reality. Inside, these guys were doing thousands of simulations a second on these cutting-edge GPUs, graphic processing units. And I said, well, what are these things? They said, well, those guys are from NVIDIA. We've got chips that aren't on the market. That insight said, okay, let's find the next NVIDIA. We end up finding this guy, Naveen Rao. He's developing these next GPUs, a company called Nirvana. I'm out there publicly talking smack about it. Intel is in secular decline. Intel buys them a year later, $400 million without a dollar of revenue or product, just for the core team and technology. It was amazing. And none of that, it's humbling because you have no idea. And then it happens, and then you can sort of paint it backwards as this linear chain of events.
Fascinating. And speaking of AI, what you guys are in a bunch of things, right? So you were in Nirvana, GPUs, you were in Clarify.
Yeah, Clarify, New York-based company. I mean, Matt Zahler, one of the only people to have been trained under Jeff Hinton, who is basically the godfather of AI for Google, and Jan LeCun for Facebook. And here was a guy who literally out of his NYU, here in New York, right? Out of his NYU dorm room, dead of winter, it's like February, and he's got to open the windows at like 20 degrees because the GPUs that he built to win ImageNet, to do image search and instantly label large data sets, were spitting off so much heat. And he was getting offers, $500,000, $1 million, $2 million salary offers from Microsoft, Facebook, Google, and he said, "Screw this! I'm going to start a company." And then us and USV and some others, funded him, and amazing guy, amazing New York story too.
And so you continue to be bullish on AI. Where are we in the cycle?
We're definitely at the, I don't know where we are if we're at the peak, but if it's on the cover of Time magazine, if it's on the cover of Bloomberg Business Week, it's mainstream, right? And so I want to get the stuff sort of when it's at Science and Nature, pristine and National Academy Science, when there's a little bit of time arbitrage before it's gone to like Tech Review and Wired, before it goes to the mainstream. So if that was a sort of magazine measure of it. And then I got to tell you, once it hits marketing programs like IBM, and I don't know if anybody here is from IBM, but like, that's just utter bullshit. I mean, I just call a spade, and IBM is a company that basically is buying technology ads in the back of magazines and purporting that they're doing AI. It's sort of a joke, but so that's where I think we are in the cycle, and I think there's going to be a backlash. People start renaming what they do. They're going to not want to be associated with certain things. And you see it already, right? People trying to make the nuanced distinctions between, deep learning and convolutional neural nets and showing the degree of sophistication that they have. At the end of the day, the customers are going to want to know, what capability do I have to do something that I can never do before? What insight could I get from a large amount of data that was never parsable before? And that ultimately, no matter what you call it, sort of an AI rose by any other name is still a rose. That's what's going to matter.
Great. So tell us about some more cool stuff that you have. Like in The Economist just last week, there was an inside cover on Cell Drone, which I always thought was the coolest thing. What does that do?
So we've got, people say, well, where are your companies located? And, I don't say East Coast, West Coast, Europe, whatever. It's like, well, what stratosphere, of the planet do you want to talk about? Because we've got robots in space, we've got drones in the sky, we've got, autonomous vehicles, you got robots in surgery, in ER departments. But this was the oceans. And so if Planet Labs is covering the Earth with satellites, here was a team, and again, same thing. You had an amazing technical founder, an amazing salesperson in Richard and Sebastian, who are the founders of Saildrone, and they have this giant sailboat that's like a small catamaran. At first, we called them datamarans, and these things can flip over in hurricanes. They're probably from here to the ceiling, 25, 30 feet high. You have hundreds of analytes, sensor, payload that you can put on top of this. And it totally changes the economics for anybody doing surveillance, weather management, ecosystem analysis, fisheries, I mean, it's just $100,000 a day for like one of these giant NOAA ships, $2,500 for one of these things. And so we funded them, and then, I think they had one or two sail drones that were going out, and they were going, San Francisco and like rocky weather and surviving, bringing back all this information. And we'll have probably 1,000 over the next 2 years covering every square inch of the ocean. And now we are quite literally, and figuratively navigating very choppy and tricky waters, like going into the strait, near Russia, or going into Chinese territory, and what happens, and we, if these things get captured, and it's very, very novel situations.
All right, very cool. Maybe one last question from me, and then I'll open up to people if they have any question. So all of this, it sounds amazing, but it's sort of the dream in many ways for a lot of people, including people in the audience. It's okay, I'm at the beginning, I'm in the trenches. Like, how do I get from 0 to not 1, but you're 0.25? What do I do to get in front of you, to pitch people like you? What do I need to show? What does my team need to look like?
So I think, it's the same thing for people to get in front of you, right? It's like the first thing you want to do is show that you're effective. And so find a way to get to you, right? My email, josh@lux.vc, email me. But, most people won't, right? So take the initiative, be aggressive, find people within, our respective portfolio companies and reach out to them, and what's it like to work with somebody at Lux, or, find a way to get there. I don't care about anybody's pedigree. I don't care if you had a PhD from Harvard. I don't care if you went to college at all. Those to me are shortcut heuristics that suggest, if you were an amazing student at Harvard, it tells me you were an amazing student at Harvard. You're probably smart, but it doesn't tell me anything about your ability to run a company or raise money, or figure out what a customer needs and deal with somebody when they're violently upset at what you just promised them and you failed on because it wasn't your fault. So I would just say be persistent, be persuasive. And be really aggressive in an ethical way, but be aggressive. I think investors particularly want to see that you're going to be like the Kool-Aid guy, just like breaking through walls for your team, for your investors, and ultimately that you have a conviction that what you're doing really matters. You're not doing it because you think it's a trendy thing and I should be in this space because there's money and attention and media coverage, but you're like psychotically obsessed, like this is what the world should look like, and I'm going to make it so. So yeah.
Very cool. All right, do we have questions?
I love this thing.
So when you're evaluating a company and they make a claim about the technology, like what tips off your bullshit centers about whether or not the claim is correct or not?
Well, the first thing, if somebody says like we have something and it does this, you say, okay, can I get a demo? And it's literally amazing. I've had investors being like, well, what question would you ask, when you go see this? I'm like, does it work? And, it's amazing how few people ask that. We've got a company in Boston founded by an amazing entrepreneur, Rick Fulop. Rick founded 8123 Systems during the move in EVs and battery companies, and then he started this company called Desktop Metal, doing metal 3D printing. And by the way, we had a view that we were not going to fund any 3D printer companies. We had a company here in New York called Shapeways, and we liked where they were situated in the ecosystem, but we weren't going to fund the printers. Rick changed our mind. And why? He was able to show us a small prototype. He told us exactly how much it would cost, what his performance would be. We took the financial risk to do that, and he did what every great entrepreneur does, which is he underpromised and overdelivered, and he just blew people away. So does it work? Find the shortest path to show that it works, and then persuade technical experts that firms like us might hire to take a look at it and blow them away.
Thank you.
So you mentioned time arbitrage, 3, 5, 10 years, and also like the 10-year lock on, I guess, your own investors in the fund. What is like the longest time horizon for an investment? Do you have any that still haven't come to fruition? Is this like just basic research from some PhD that was published in Nature? Or again, like, have you done anything longer than 10 years time horizon?
In one of our earlier funds, we have some companies that are still private, and it's been 10 years. Yeah, and so some of these things, maybe you misjudged the market and you thought that it was going to be faster adoption, or maybe there was like a screw up in manufacturing and it cost a year. And, my rule in life, like literally whether it's like, designing anything or going on vacation or anything with my kids, like everything times pi. So literally, like if you think it's going to cost $3 million, it's going to be 10. If you think it's going to take 2 months, it's going to be 7. Just like everything times pi is like the right margin of safety to allow you to be wrong. And I think it's a really good discipline, by the way, to be like, I really believe that we can do X, and I really think it's going to cost this. But that said, I want to have a buffer so that I can afford to be wrong.
Okay.
Sit over there.
So with something that long in horizon, how do you place a valuation on something like that? And there's no comps. It's so, cutting edge. So how do you create a valuation for a company like that? And how do you even negotiate that?
Well,
so,
at the very...
wait, and I'm going to two-factor that. Put yourself in our position of how we would negotiate with you with something that.
So you should negotiate with any investor. I think the same principle, which is, do I want this person as a partner? And depending on the stage that I'm at, you shouldn't be giving away 50% of your company ever, right? The average investor on an average round, putting an average amount of money in, is going to want somewhere between 15 and 30% of the business. 30% on the high end, 15, sort of on the reasonably low. There are companies today, to this point about the availability of capital, that are raising at very, very high valuations, and I don't think they're really treating investors like partners. Investors have what I consider sort of a sock in the drawer. They make an investment and sort of own like a few percentage points. It's a logo on their webpage, but they're not meaningful partners. So I would think of bringing on an investor in the same way you're thinking about bringing on a founder. This is somebody you're going to be with, married to, talking to weekly, for 5, 7, 10 years, and it's got to be somebody, most importantly, that you like. By the way, that's another thing. People think, I want to get money from this firm. There are people that might love Lux, but maybe they don't like Josh. Maybe they don't like me. Maybe they like Renata or Peter or Bilal or Zach better. And so I think that's really important. Is find the right partner that you want to be partnered with. But if you go back to that sort of zero sum between risk and value, first round, we're taking a risk. Can they build a team? Can they build a basic prototype and show that the technology works? Can they validate that there's some market demand for this? Can they validate some sort of competitive positioning that would give them unfair advantage? Next round, whether you call that from a seed or a B, can the team scale? Are they in production? Do they actually figure out a pricing strategy? What technical risks have they eliminated now? Sort of what have they done to expand that moat so that they're even more competitive? And again, as you kill those risks, you're creating more value, and each subsequent round should be some multiple of the last.
All right, last question from me, and it's possibly a juicy one. Actually, that came through Twitter from my partner at FirstMark, Amish, who wants to ask you about your views on Tesla.
Tesla, what do they do? Is that
It's apparently
yeah.
You are tweeting that Tesla's treasurer and VP of finance left, the head of accounting left.
This is heresy, right? Because in my world, we celebrate the iconoclastic founder, the brilliant entrepreneur who, against all odds, takes on the big industry and takes them down. And I always say that there's a difference between like science, of which there's a huge amount, technology. There could be amazing technology. There's fewer products, between that, and then there's fewer businesses, and then there's fewer great investments, right, all the way down the funnel. I believe that Tesla is an incredible brand. I believe Elon is an incredible entrepreneur. I believe that it is a horrible business that burns cash at a rate that is really unprecedented. And it has so far been a great investment, because if you were an equity holder, you would have made an enormous amount of money. And if I in fact, as an investor, I'm neither long or short it. I'm not long it because on a fundamental basis, it's detached from reality. I'm not short it because it is a religion. And I say that what Elon sells is not cars, but a future. And people really want to believe in that future. I do think that we're at a point where, like any religion, you would want to look at the people in the pews. And I think that you're starting to see, and I predict that it will be first customers that start to get upset. And you're starting to see that particularly with Model 3, $500 million of reservations, and very few of these cars actually delivered. 500,000 reservations with 1,000 each down. I think then it'll go to a few institutional investors, and the institutional investors have an interesting psychological bias because they very publicly committed their commitment to how big Tesla is. And so, there's 3 or 4 of these guys, very large positions at Tesla, who have said that, they're long-term holders, for virtually forever. And if 1 or 2 of those change, that's significant. And then I think retail investors sort of get it last. But I think, as evidenced by a CFO, as a chief accounting officer, or treasurer, these are not signs, of good fiscal stewardship. And I think that's the problem. So, yeah, I'm bullish on the brand and bullish on Elon as an entrepreneur, truly amazing storyteller, but not on it as a business.
Very interesting view. Great. On that note, thank you so much. This was terrific. Thank you.
Thanks.